Okay. All right. All right. All right. Okay. Here we go. Welcome, welcome everybody. I think the mic's good. If it's not, let me know so I can take it up or down. If it's too loud, if it's crackling, we will get this party started. What a day. 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 Let's get this out the way and get this down. All right. So, what the market's saying. Welcome, everybody. Tap in. Let's know who you are, where you're from. Are you in the community or you are part of the wider online community? If there's anything specifically, we're going to be looking at gold and EU today, but if there's anything specifically you want us to look at in gold and EU, let me know. I will do my best to oblige. Let's see if we can get my mug up on the camera. I think we can get my mug up on the camera. There we go. There we go. All right, so I'm going to try and keep this as short and as sweet. I'm going to be assuming that everybody watching is at least on Discord, or at least on the free Telegram channel. Even if you aren't, don't worry. You will still get 90% of everything that I address. There may just be one or two things I make reference to that you may need to do some extra work on. This channel is full of over 100 videos, all free, with all the stuff that you may want or need on most of the concepts we'll be discussing. We're just going to go through the charts and apply stuff in real time. So first thing we're going to do is take these glasses off. First thing we're going to do is we're going to go to a 4-hour chart. Now, again, I've taught you guys about the triads of time frames. I go weekly, 4-hour, 15 minutes. So that's my sweet spot. You can do monthly, daily, 1 hour. You can do weekly, 4-hour, 15. You can do daily, 1 hour, 5, and you could even do 4-hour, 15-minute, 1-minute chart if you really want to be a super scalper. Price is fractal. All rules apply on all time frames. Okay, so first of all, let's get ourselves a clean chart here. That's the first thing I do every time I open a chart. Let's just clean it up. Let's clean it up. So make sure not to remove. Okay. What we don't want to remove. Okay. Get rid of that, and then that can stay. That can go, that can go. All right, so cool. And I'm going to turn off all indicators for now. Right, so when you start the week, let's see, the week started on, today's Thursday, Monday, so Sunday there. Okay, there. So we're going to go do a replay. We're going to cut ourselves off here. Here. Excellent. So if you came to your charts on a Sunday evening, this is what you would have seen. Now, 4 hours is my signal chart. Weekly is my levels chart. 15 minutes is my execution chart. What kind of levels are you looking for? What we call the sensei bus stops here at Plural Markets, the hedge fund. Open highs, lows, and closes of a higher time frame. In addition, you can look at your points of control, volume area high, volume area low, order blocks, fair value gaps. In essence, we're looking at points we expect price to respond to significantly on a higher time frame. We're superimposing them to a lower time frame. For the sake of the setups I'm going to be showing you, and Tan, if you're in the live, let me know. drop me a comment. Let me know that you're here because I'm going to show you the sensei thing again. So just let me know I'm here so I can take time and actually show you the sensei framework again. So basically, the way I'm going to be trading this, all I really need from the higher time frame to start with are the opens, highs, lows, and closes of monthly, weekly, and sometimes daily time frames. That's for the way I'm going to be approaching this chart. Now you can bring, I'm going to show you a universal way to approach the charts, whatever your strategy, your system is. Whatever entries and exits and systems and indicators you're using, bring them along. I'm not going to be going too deep into those. I'm going to show you mine in a little bit of detail because one of my students has asked me to do that. But other than that, it's the methodology that is applicable across every single trading system that actually makes sense. Some trading systems just don't make sense. So, all right, so let's go. How I'm going to do that is I'm going to put on this indicator here, which is custom built for our students at Pluro. It's called the basically the Hedge Fund Suite Ultra Gold. It does a couple of things. The two specific things I want it to do for me are to show me the volume area profile on a weekly time frame and to show me the bus stops. And that's all I'm going to do. So I'm going to go in here, click on the settings. Okay. So I'm going to enable volume profile. I'm going to show the watermark at the bottom. It says it's ours and the bus stops, right? Okay. Now, on the 4-hour chart, I want to anchor the volume area profile to the weekly profile. And then the bus stops, I want the weekly bus stop and the monthly bus stop alone, right? I'm not going to mess around with the daily. Actually, you know what? Let's add the daily bus stop. Let's add the daily bus stop because we're going down to 50-minute chart. So that, ladies and gentlemen, is what my chart looks like. All right. Now, when this week was forming, or at the end of this week, we have here, these are the, you see they in blue. That's the point of control, the volume area high and volume area low of basically the current week. Now, it looks like we're still in last week because I've got the replay feature on. If I go for 1 bar, that's the start of this week. You see these have now turned to gold and red because now this is locked in. For those of you who trade volume area profile, we have an entire section of our course on it. SD's been working on an entire book on it, and I actually have it down as the 4th in a series of books I'm working on. So it's his first book. It's going to be my 4th book. We're going to go to town on volume area profile. All you need to know for the purpose of what we're doing is that the point of control is basically the price that was the point of control. In essence, the most agreed on price, the price that seemed to be the fairest value during that week to buyers and sellers. And the volume area high and volume area low mark the area of price in which 70 to 80% of all buying and selling took place. They're important because they are key levels. And I'm drawing them on a 4-hour chart based on the weekly time frame. We're going to use the same levels on a 15-minute time frame. Cool. So this is how the week begins, right? So I have the levels I need. This is here. This is the levels I need. The bus stops from the weekly, daily, and monthly time frame. And I'm looking for a signal. Now, Tanya, this is the signal we're talking about. Now, I'm going to take away the volume profile for a second just so you can see me when I draw that. Now, that's my sensei signal. You can use whatever you want. I'm making that clear. Whatever you bring to the chart will work here. I'm just giving you one way I read the charts, okay? So we're going to get rid of these lines so that when I draw highs and lows, good to see you, T. When I draw highs and lows, we're good. Fine. So this is a 4-hour chart. This is where the week began, right? This is 3 a.m. on Monday. I am looking to see that a 4-hour, it could be any time frame for you, a high or low is swept and reclaimed. That's my phraseology. Swept means price goes above it or below it. Reclaimed means price comes back through the level it swept and closes on the other side. That close is very important at this time frame. On the entry time frame, the close is not so important. On this time frame, it is. Meaning on the signal time frame, it has to close. On the entry time frame, we can take it while it's still forming. So as of here, right, I have two options. Option one is this high here, right, was swept. It was swept by this candle, sorry, and reclaimed. Now, this reclaim does not engulf this candle. So that's no valid signal. It looks valid for a while until you see this happen. This, in essence, this is the candle that takes us through it. This one there. Once that candle forms, we need a reversal pattern. It can be a one candle reversal pattern like a doji, a hammer, a shooting star. It can be a multi-candle reversal pattern like an engulfing, whatever. This here is not a reversal candle, so it's not a one candle pattern. The next candle looks like it's reversing, but its low never takes out the low of there. So that doesn't work. This comes back, still not engulfed this candle. But now we have another bullish candle, so this then becomes our reference point. The moment this candle forms, we ignore this one. This becomes our new reference point. And the very next candle goes back through the reclaim level. So we move that stick over there to here. That's now a new high that's taken out, right? And then do we engulf it? Not here, but here we do. So at this point here, on the 4-hour chart, we believe we have a short. That's it. It's as simple as that. We believe we have a short. Okay? Now, let me make that clear. Impute. Where's style, visibility? No, what am I looking? Okay, there we go. Go. And then let's do the green so you can see clearly. Cool. So now, like I taught you guys in the class, the paid class, but I'll just give this nugget for free. You want to see on a time frame when you see a reversal candlestick pattern, if you are not factoring in a higher time frame bias. So I've not looked at the daily or the weekly here to determine direction. I'm just trading a candlestick pattern. That's what it is. A level was swept, right? And you also see that that level also is a bust up here. So that's good to know. A level was swept, reclaimed with an engulfing. I am looking for this to play out on a one-to-one basis. So I'm going to put that to one-to-one. Okay, that's one-to-one. Now, I then ask myself, is there anything structurally that tells me price should at least get there? Because you can just put 1-to-1, 2-to-1, 50-to-1 on your chart all you want. You need to see something on the chart in terms of the market structure that tells you your target is realistic. And that for me is here. There are these lows here, almost equal lows on a 4-hour chart. And so it makes sense. What have I done? Okay, so it makes sense that price would want to sweep this level of liquidity there. Right? There's a low there and a low there. You know, and this is also, for those of you who know what I'm talking about, I'm not going to go into details with this. This is one of the things I mean by you're just going to have to accept that there's some inside secrets, not secrets, but inside explanations I don't have time to give. There's a 4-hour consolidation there. If you are a Plural Academy student, you know exactly what that means, don't you? And so you were not surprised. 1 second, border, style, border, middle line, background is what I'm looking for. Cool. Excellent. So you know that this midpoint of this consolidation here is gold. You know that. Also, there's a low with liquidity here. So basically, the 1-to-1 makes sense. That's all you need to know. The 1-to-1 makes sense. Now, the issue then is this trade here happened last week. We could have gone in and looked for a 15-minute entry that would have given us a much tighter stop, much more risk to reward. But this 1-2-1 has already played out. And as it played out, it gave us another sweep and reclaim. We took out that low, we reversed back, and I'm going to get rid of the short now. On the long side, here, meaning the moment we engulf this candle, right here, and the blue candle, the 4-hour candle closes to there. That's the level of the candle we're engulfing. Here is where it engulfs, right? So at that point, again, why is this keep giving me these opaque boundary lines or backgrounds? Why do I need to keep changing this every time? All right, so again, the exact same thing. We want to see at least a 1-2-1. That's 1-2-1 there. Now the question is again, does it make sense that we get to the 1-2-1? It does. Why? Because there is a high here. So we would expect there to be liquidity resting just above that high. And so we can expect this to happen. Again, you will notice that by the time the week opens, this has completed. So you're probably wondering, why did you bother showing us those last two moves? Because they're important for what's going to happen during the week. So we've completed this. Now, what also do we see here? Well, it just so happens that this reclaim here broke market structure to this side, right? This is a 4-hour low that was taken out. And it happened first. So we took out a high, price swept and reclaimed, that's the Sensei framework, and broke market structure once and twice. I am entering this week with at least a bearish bias for the start of the week. Whatever happens in the rest of the week is irrelevant, but right now, the next thing I expect price to do is short. If I expect price to short, I then throw in a Fibonacci from high to low. Again, we're going to change the level, so that we're going to make that 0.618. We're going to make that 0.74. Put in the 2.4. That would be 0.5. We're going to make all things one single color. So let's use this color, shall we? Okay, and we want the text. 1 second now. What am I looking for now? I want all the lines on one side. There we go. Labels, right. Cool. So we want this to come back to at least the 61.8, and it does that there. So our very first candle of the week brought us back to a premium. We've had a bearish reversal, bearish market structure shift, and change of character. We've had a deep retracement back to 61.8 and now 0.74. So now we're fixing to short. The way I'm going to be trading, I'm only looking for a short at this point. My first move of the week is going to be a short. Now, the first move of the week being a short could mean that the rest of the week becomes a long, but on the lower time frame, I'm looking for a short. All right, cool. So let's keep going. We've established that we've reached the level where we can expect a short as a retracement. All right, now we're going to take off the Fibonacci so the chart's clearer. And we go move. Next bar. You ask yourself the question, is that a reversal, a continuation, or an inconclusive candlestick? The answer is inconclusive. Okay, next one. Same question. Is that reversal? Not quite, but it looks like it might want to reverse. Okay, that's bullish. So, however, we can see this candle, this candle, this candle have been rejected from this area. And if you know, then you know that this is a very valid order block there. There's actually two order blocks there. There's one here. It's a smaller one. There's actually a bigger one there. This entire region here on the lower time frame is going to be an order block. So, but if we just align that with that candle there, the smaller order block, we now have a region we expect price to be reacting from. And does it react? Oh, yes, it does. Next candlestick, wicks right through it, no problem. Now we're back to the bigger order block. Next candle, and notice that's exactly the middle of that. So next candlestick, through, okay, now we have pay dirt. Now, this to me, yes, I know we haven't quite taken out this low, but that to me is on a 4-hour chart, that's a very firm signal, right? Now, what's the difference between this here, you're asking, and this here that I didn't accept? Simple. This high never ran that high. This one does. And then it's pushed all the way down. Secondly, this candle's wick is less than its body. This candle's wick is almost twice the size of its body. Something here said, get out of bed. Now, I could very simply do this. Again, frame the trade the way I showed you last week. Entry there, stop loss above that 4-hour candlestick, and go for 1-to-1. And is there something that makes sense around 1-to-1? Yes, there is. First of all, there's a bust stop there. Secondly, that is a swing low on a 4-hour chart. So I'm just going to extend that 1-to-1 all the way to that bust stop. And that swing low. I now have a range of price. I expect price to, starting from here, end up here before it ends up there. I want to repeat that. This story is suggesting to me that price will, from this point, get here before it could get to both parts. The order in which it does is what determines whether or not your trade wins or loses. I now am going to go to a 4-hour chart and try to find myself a structural entry and exit that gives me at least 3-to-1. I'm done with the 4-hour chart at this point. Boom, 15 minutes chart. There we go. Are you thinking, oh, well, I could just have gotten in there? Well, you didn't know for a fact. I'm going to show you why I got in up there, but not on the setup I'm showing you. Right? The setup that got me in there is a different one from the one I'm showing you. But you don't know for a fact that this is coming all the way from there when this comes here to here. But now you do. The 4-hour chart has given you a directional bias. Remember I told you, you're pretty much going 1-to-1 on candlestick reversals when you are looking at just one time frame. If you're coming with a bias from a higher time frame, then you can expect more. So I expect price to get to here before it gets there. Okay, now I need to find myself some sort of entry. Well, first things first, that's run that high and reclaimed. So some sort of Fibonacci retracement might be a good idea. Secondly, and again, this is for my students. We've been hopping on this for the last week or so. Consolidation down there. But even further back, I'm just going to go to a 30-minute chart so you can see it a bit more clearly without squishing it too far. There is a consolidation, right? And for those of you in the Discord, you will remember that I called this consolidation at the start of the week before it paid us like it did. Consolidation there, draw out the middle. Okay, so you will notice, I think anyway, that this level took us through this reversal, but then that was an inducement. So now we think we're in the pay dirt, which is why I got in there, right? That's why I got in here. But let's assume you weren't looking at price last week when I was. We're looking for a 50-minute entry. Here we're now going to slap on the volume profile. We're going to anchor it to the session now, meaning the day. Okay. Pro tip, ignore today's volume profile while it's forming. Look at yesterday's. Okay. So volume profile, we good? Okay, it's still loading. Just going to wait for it to load. It's taking a sweet time. I need me some sleep. That is taking forever. What's up with my internet? That's fine. Okay, good. So at this point, this Monday's profile was loading. What we had to work with were Friday's levels. Volume area low, point of control, volume area high. Notice that this right here consolidation formed roughly around the point of control. That's not a coincidence. All right, you're gonna see that a lot. All right, so let's play out next candle. We would be expecting some sort of reaction around the point of control, hopefully, to give us a retracement. Do we have a reaction? Yes, we do. Could you scalp this right back up to here? Yes, you could. Let me show you what I mean. If you just wanted to do this, I don't know if it would have won today on this day, but this in itself is a valid strategy. Just go from there all the way back up, because why? You're expecting a retracement anyway. You expect a reaction around the center of the consolidation and the point of control. And so this would have, 1.4 to 1. Let's see if you would have won that trade. No, don't send me notifications. So would you have won that trade? No, you wouldn't have won the trade. Fine, you would have lost it. That's fine. That's cool. Sometimes you win it, but anyway, that's not what I'm showing you. So that carried on going. Now, if you didn't get in here like I did because you were watching price last week, at this point you're doing nothing. And you have to learn when trading how to do nothing. All right? You need to learn how to do absolutely nothing. Now it starts coming back up. So now we're getting the kind of retracement that we said we wanted, and then it's dancing around. And once it starts dancing around and you see the volume profile compressing, that's one way to spot a consolidation live. You notice the volume area high and low start to compress. Once you start to see that happening, you know another move's about to begin. So you're patient. We had the 3 p.m. New York rush, right? And then this happened. Price went decisively one direction. Now, what happened here? Bear in mind, you're trying to get from roughly here. Remember I said from the 4-hour chart, we drew an entry line and an exit line, meaning price has now made our 4-hour trade for us. But we're not trying to get in with a 4-hour stop loss. So how are we getting in? Well, let's follow this as it forms. Okay. So we start forming a consolidation at roughly yesterday's POC. Price is going up, down, up, down. Now, here, this is where the 4-hour we came down from the 4-hour chart. We're trying to see, can we get a sensei on the 15-minute chart, because that's my entry pattern, whatever yours is. So that's the first high. I'm going to draw that out, right? Then this high forms, has not claimed it, so now I'm going to move it down there. I basically want that high taken and reclaimed. The exact same 4-hour signal I want to repeat on the 15-minute chart. And all while that's going on, I'm having me tea, doing my business. Oh, that high's taken and it's reclaimed. It's that simple, ladies and gents. Short, enter there, stop loss there, with the same 4-hour target, which I believe was there. I believe that was the 4-hour target, wasn't it? If I'm not mistaken. Somewhere in this region. Anyway, that's the trade. It's 2.2 to 1. Now, bear in mind, we do have a 4-hour bias from a high time frame. So, is there anything down here that interests us? Well, there's several bus stops on the way down. That is a previous day's volume area low. And that's 2 days ago volume area low. We believe our trade will take us past this anyway. So I could anchor it based on that there, or that bus stop, or if I'm feeling real, what's the word now? If I'm feeling real reckless, how about we come all the way down there, shall we? This is 3 to 1. Okay, let's see what price does. That's a good start, isn't it? And this is what happens when you trade in kill zones. All right, what's a kill zone? 2 hours before and 2 hours after a major market session opens or closes. I prefer the open kill zones, if you ask me. I think they're more productive. But anyway, first candle, good. Second candle, great. Third candle, slight retracement, but we're locked in. And I was giving you guys this trade live as it was happening, but we were reasonably confident. Now, bear in mind, by the second candle, we have already taken the original trade. That was to this level, wasn't it? So we're 2 to 1 in 30 minutes. But if you were holding out for a longer play, let's go to that bus stop there. Let's see, I can't remember if we got there now. I think we did. And this was basically 3.5 to 1. Yeah, I think we might have. There we go. That's it. And you're out. And of course, price retraced eventually. Now, let's look at the retrace, because there's a lot to be learned on the retrace. So here is where we are out, right? We're out here. Okay, trade's done. We go back to a 4-hour chart and we do the exact same process over again. So on a 4-hour chart, what does it look like? Well, price has made this low there, and I'm gonna, 1 second, take all this off again. So we basically have run into this consolidation midpoint here. All right, it's basically what stopped us on the 4-hour chart. So we've tapped it, we're out the trade. What happens? Well, there is a sweep and reclaim. Right? That's a sweep and reclaim of that level. Is it a high or no? Or low? No. So if you, again, I told you guys, Sensei is much deeper than all I've shown you, but it works not just with highs and lows. As you can see, it works with consolidation midpoints, volume area highs, lows, the works. But there is, prices tap that level, which we expect to be a liquidity point, and reversed. What happens next? Comes back down again and reverses again, forming its own consolidation now. Right? That right there is a 4-hour consolidation. And in the future, it will have something to say about price. Okay. So you could basically say we've tapped into there, we're off to the races, and again, I'm going to take myself along at the engulfing level. I'm going to put my stop loss beneath it. Where am I going? I'm trying for 1-to-1. And then go to a 15-minute chart and try to find an entry. I would actually tighten the stop loss to there, because that's the actual engulfing we're trading. So now I'm going to come back and show you how there was an even better way to do it. But if you'd done that, well, you would basically be looking for a trade that gets you from here right, to there. What has happened? Has there been a sensei? Yes, there is. I swept that low and then formed, and then took out that high on the way and gave Fibonacci retracement. Also, if we slap on the volume area profile, let's give that a while to load. And notice we're working through the week as it forms. We're not doing this in hindsight. We've used the replay to basically show us what we would have seen as price was forming on a weekly basis. Okay, so now for this week here, 1 second, just be sure that that is the weekly. Not last session. Actually, no, so that's what we want. Yeah, so that's, yeah, exactly. So this is yesterday's volume area low, volume area high, and POC. We're down there. We would expect price to at least get to the volume area low, and most likely back to what, this is what you would call a naked POC. Price is pushed down beneath it and hasn't come back to retest it significantly. So I'm going to bring this up here, back to the POC. Simple. My target to get from here, there. How do I frame it? Well, I already understand that you've had a sweep, reclaim, Fibonacci, deep retracement, and here, roughly around the 61.8, we have had an engulfing. However, we were waiting for the 4 hour. Like I told you, you could have gone this first one here. But if you were being patient, this is where it was really beyond doubt. So let's assume we waited for it to be really beyond doubt. We've missed the optimal entry. So at this point, the optimal entry would have been to put the stop loss there, right? And that would have been a really sweet trade. But we didn't have a 4 hour signal. By the time we got the 4 hour signal, the optimal 15-minute entry had gone. That's fine. Just stick with the process and see if price lets you back in the trade. So it's moving, it's moving. Okay, 1 second. It's moving, it's moving. Now, if you don't see this, don't sweat it. Most people who traded 20 years don't see it. And I don't see it all the time. But that, ladies and gentlemen, is a consolidation. That's the midpoint, and that's there. Secondly, as at the time this forms, this is the volume area high of the day. Right? Okay. This, I'm not going to deny would have been a risky trade. Right? This would have been, I'm using this low down here. This would have been a risky trade. There's no doubt about it. And anybody who tells you otherwise is lying through their teeth, unless they're analyzing it another way. But it's an entry. And did it pay? It did pay. But again, let's assume you didn't catch any of that. That's fine. Right? You just carry on. And now you're looking for your next reversal, pullback, all that kind of good stuff. At this point on a 4 hour chart, we have now broken several highs, right? We've broken several highs, and there's a huge price inefficiency, which we expect to be filled to some degree. Okay? Price is going. you will notice this if you're attentive, that this high here, right? Once price breaks through it, its momentum slows down. But that's neither here nor there. Okay, so we have a reversal here. Why did it reverse there? If you want to be pedantic, you come here, it was this high, right? Once it went through that high, picked up the liquidity, it reversed. And the truth is, you would have been entitled, especially if you're trading a prop firm, to go for 1-to-1 here. 1-to-1 and see, does it get there? Does it get there? It does. Right? Now, not knowing for a fact that it does, let's just go back here. So at this point, we have reached that high. And why hasn't it? Okay, it hasn't been shown on my chart because I've turned off this. So let's turn off the volume profile on this. So it just shows me the bust stops. So I would expect to see that high there as a bust stop. And what do you know? There it is. Okay, so I'm expecting a reversal there. It's going to go to 15-minute time frame. Actually, no, sorry. We're going to wait for the reversal first. And then when we get it, now we go to 15-minute time frame. Can we find a trade? Well, there's been a short. Do we get a Fibonacci retracement? Let's see. Okay, so we get a retracement. And then we see that. We have a choice to make. Do we take that? Again, it's not the safest of trades unless you want to put your stop all the way there. But then that doesn't pay. So, do you want to take that risk? Do you want to take that risk? If you did, you would have been paid handsomely. And that's why I keep telling you, if you're going to make money in the markets, you've got to be ready to lose money, which is why we tell you don't risk more than 1%. So, did that play out? Yes, it did for 3.5-to-1. You take your winnings, you move to the side. Okay? Go back to your 4-hour chart. So now, that's in. Where do we go from here? Boom. 1 second. Okay, now, remember I drew out this line and I said, watch, that momentum slowed once we got above that line. Remember? I said, watch that line. Notice also the lines become a bust stop. Once it formed, it became a bust stop into the future. Well, what happens the next time price gets there? So this was the reaction. No, show that one. This was the reaction, right? Ladies and gentlemen, that is what you call a single candle reversal. You had a candlestick form. First of all, it's taken out a low, so it satisfies the classic Sensei framework. That's a low there, because the candle either side of it is higher. So it's taken out a low. That is this here is gold. On the 4-hour chart, that's gold. So again, long. This is the close of the candle, the bottom of the candle. We're expecting it to give us a 1-to-1, right? Do we have anything reasonable to expect a 1-to-1? Yes, we do. Why? This high right here and this bust up. Can we frame a trade on a 50-minute time frame that takes us from here to there before it gets here? Let's see. That's it there. Is there a Sensei framework already in play? Yes, there is. This low has been taken out and price has reversed through it. Then it retraced and gave us this. I would be tempted to get in. In fact, not tempted to. I'm getting in right there. Right where we are. Putting my stop loss there. May we lose? Sure, we can lose. Anybody can lose. Right? And we're going at least up to here. Now, is that at least a 2-to-1? Let's see. Actually, yeah, it's 1.93 to 1. Okay. Excuse me. Now, anyways, like I said, that in itself is a valid trade all by itself. But let's see what happens. Boom. It's that simple, right? Now, if you go to a 4-hour chart, I'm sure you can find a higher target. Let's see. Okay, there we go. If you say, well, I don't want 2-to-1, I want more. Certainly, there's an order block right there. Look at that. That's an order block right there. Right there. Right there. And a order block right there. That's our resistance target. Okay. Is there a high there? There is a high here. Did we get to look at that, ladies and gents? Look at that, boys and girls. To the pip. Right? To the pip. Which would make these equal highs, which tells me that price is going to come back above there eventually to raid it again. So I'll be honest with you, I didn't see this during the week. I'm just looking at this in review now. But this should have been a sign to me that whatever happened later on, price was coming back to take that high. But anyway, we got it in 15 minutes. On 15-minute chart, there we go. 1, 2, 3, boom. 2-to-1, we bank it. At this point in the week, I'm 7-to-1 up, like I showed you in Discord. And usually this is where I say I'm done for the week. Now, I did, in my tiredness, make a mistake, which I showed you in Discord. Gave a trade as a sell and accidentally took a buy. And stupid way to lose 2% because I was sleepy and I thought, whatever. But that's that. 4 hour. So what do we expect? Like I said, I now believe we're coming back to claim that high. Why? It's to the pip equal to a high from weeks ago. I am of the opinion we're coming back to claim that high. So again, I need a framework for that. So we come down from the low there. I'm looking for somebody to take me out a significant. Okay, so basically it's done that there. Right, so again, I'm looking to sweep below and reclaim. So that happens there. That's a low I've swept. Okay, do we reclaim it? Also, it's this here is at the volume area high from yesterday. That's what this line's telling me, right? Volume area high, POC, volume area low from yesterday. So we've taken out that low, taking it out, taking it out. Okay, right here, we've reclaimed it with a firm reversal. I told you on the entry time frame, I don't wait for reversals for the candlestick to close. Once it crosses the level, I wait on the signal, not on the entry time frame. I'm going back to that high. All right, that's again almost a 4-to-1. 3.5-to-1, I mean. So okay, that's just over 3-to-1. So I'm in here before the candle closes. I'm setting my entry there once this is taken out. Well, do we get there? We do. In 3 candles. All right. And we go even higher. Anyway, back to a 4-hour chart. Remember, I'm looking for my signals on the 4-hour chart before I drop down to 50-minute chart. So we're going higher and higher to the moon. Okay, 2 candles now rejected from roughly the same level. Could price be turning around? And that is where we currently are as of 3:23 in London on Friday. That's the week in gold in review. And we saw 4 scalping opportunities and 2 intra-week trade opportunities to take. And all we've done is apply sessions 1 to 6 of a 24 session course. We've done roughly a fourth. And other than the volume high and low, which I've tried not to hop on too much, there's nothing that we have done that you could not have applied from your classes. Any questions? I was going to do EU, but it's been an hour already. It's pretty much the same thing in EU. I'm not going to do it in as much detail, but let's just take a little look. Pretty much, EU and gold were pretty simpatico this week. Not always the case, but pretty much this week they were in lockstep. So again, start with a 4-hour chart. Let's find the bar. Okay, so this is how the week began. Now, I'm going to do what I just showed you in gold. I am not going to explain myself on EU. See if you can keep up with me. I'm going to do it in as close to the same time frame or speed as I would have done it without you following me. So just see if you can keep up with me. Okay. And again, you notice I'm starting from moves that have already happened because I'm trying to get myself in the right frequency. So that I would have expected that to go at least 1 to 1. And then when that formed to go to there. Okay, so we've completed that move. All right, so at that point, we then go up there. So I then flip okay, so taking this out and then this out. And so I'm waiting for a continuation or a reversal. Okay, so let's keep going. Okay, so that actually, hold on a second. That's a rejection. So that there is a rejection. So it is seeable that this happens. That's very, very reasonable to expect. Okay, so if I go to 50-minute chart, what do I see? Okay, so 50-minute chart, we have taken out the high. We have come down beneath it. And we are here. So does it give me a valid entry? Okay. All right, so we're back now in deep retracement. Again, just see if you can follow me. I'm not explaining myself every step of the way. I've done that already with gold. I'm just going to go through it at roughly the same speed I would have gone through it on my own. See if you can keep up and understand what I'm doing. Okay, so now I'm looking for a reversal if possible. Okay, okay, I got one. There we go. Okay, and that is actually quite, that's quite striking. Come back and push down, so I'm gonna go from there, put my stop loss up there above that high, and I'm holding to get to at least 221. There's a bust up there, so this will be my first target, but I would like to get back to the POC. And maybe, okay, so basically I'm holding for at least that, potentially for that, but let's draw the line here. So that's TP2 and that there is TP1. Okay, so all right, so let's see. So I'm in this trade and it takes me out. That's fine. It's a loss. It happens, okay? We move. Go back to forward chart. What now happens here? So now, this guy's here now. Okay? We blow through to the moon. Okay. And then we, okay, hold on a second. Okay, blow through. What stopped us there? We go back in time and see what potentially stopped us there. Okay. Again, we haven't done this yet, but there's a breaker there. Okay. Well, we took out the breaker, so. Oh, it was the high that stopped us. Okay. It was the actual high that stopped us. Whenever you see price reverse sharply at a level, always go back and ask yourself, if it's not obvious, what was it reacting to? What high, what low, what order block, what breaker, what POC? Okay, so it wasn't there. One second, that's not right. Yeah, move that. I thought. Okay. Aha. Okay. All right. Anyway, that's a sharp reversal. That's a indecision. Okay. So here we potentially 1-to-1. Let's take it down to the low there. Okay, go to the 50-minute chart. Is there a setup that presents itself? Okay, so that's our target. So okay, so that. So let's keep watching the 50-minute chart. Would I have liked anything here? Actually, yes, I would. Let's go back. Let's go back. So, okay. So we go from here to here. No, not you. High to low. We didn't get back to 0.5. So no, I wouldn't have liked that. So no. Nope, I'm not gonna pretend in hindsight that I would have taken it, because I wouldn't. Now, this I might have been interested in. So we move the fib, high to low. Did we get back? Go back to 50%. And we saw, nah. I'm not taking that in real time. Yes, the trade won, or looks like it won, let's see. But I wouldn't have taken that in real time, and I'm not going to pretend to you that I would. Now, this one I might have taken a look at. High to low. Aha! Yep. That came back to 61.8 and all the way back to almost 0.74. And was there an inducement? Yes, there was an inducement here. Okay, so what would the short have been? What would the short have been? There. With the stop loss there. Nope, I would not have taken this trade because I don't like the odds. 2-to-1, might have taken it, but okay, let's see. I might have taken it. Emphasis on might. But I don't know that for a fact. And it would have been in there, stop loss there. So basically like this. And then when that formed, yeah, would have been in there, stop loss all the way there. 221. Did we get there? Did we get there? No, I don't think we did. Like I said, for me that was marginal. I'm not entirely convinced that it's a trade I would have taken anyway. And so, yeah, nah. It's marginal at best. Okay, fine. So we go back to the 4-hour chart. And basically, this is what it looks like during the course of the week. You're just shocking and moving and, you know. And, okay, so hold on. Here now is a very powerful signal. This I am definitely taking. Okay, so we've come back down to this level, right? There's a low there. We've taken out that low. And we reverse through it. Now we're waiting for this candle to engulf. Here, no, here, but it came back down. Once this one forms, this becomes our new target. So we're waiting for that white candle to engulf. Came back down. There we do. So now you are entitled, very much so I might add, wrong direction, to that is a signal I am taking every day of the week and twice on Sunday. 121 is there. But look, there's a high there. There's a 2 bus stops there. And we know that we're on an uptrend anyway. If you go to daily chart, we know we're on an uptrend. So can I frame that on a 15-minute time frame? Let's see. Now, this is one of those ones where straight away I'm thinking, let's put my stop loss there and get in, because on a 15-minute time frame, that's taken out the low, it's reclaimed, it's taken out the structure to the top side, it's reversed back into that level. So technically, your argument is that if you were stuck in a 15-minute time frame, you probably could have been in right there. But let's assume you waited all the way for the 4-hour candle to close, and that's there. Okay? Now, so this is the trade. I'm in this trade, right? I'm certainly in this trade. And there you go. And this is one of those to the moons, right? But you didn't need to catch all of that. You just needed to take your 4.3521 and move aside, right? Okay. Now we are in Wednesday. So back to a 4-hour chart. Basically, once you trade wins or loses, you go back to your signal chart. Okay. So we're up there. What's going on? To the moon. And then we have this reversal here, right? We have this reversal there. So first of all, again, what was price reacting to? Let's go find out. Can we figure out what price was reacting to? Because if you can figure it out, it makes you trade it with a lot more confidence. And I seem to think, yep, that there's an order block there. All right. And I think I actually gave you this one in the chart during the week. Yep, and look at it directly to, so I'm confident. I know that there's an institutional reason why it's reversed there. So whatever okay, fine. And yep, it has reversed there and engulfed there. So this here, I'm entitled to view a 1-to-1 as plausible, right? Not guaranteed, just plausible. Okay, let's go to a 15-minute chart, shall we? Okay, so first things first, this here is a huge order block, and behind it, layering with this is also one, that's another block right there, which we're in, but then on a lower time frame, that would also be a massive one there. So basically, you get an order block, you get an order block, whatever it is. Secondly, if I draw fib from high to low, this is a deep retracement in an order block level, and we engulf there. So I'm going to get rid of the other blocks to make the screen a lot less like a rainbow. Oh, thank you. Thank you, Jesus. So stop loss there, entry there, aggressive stop loss, conservative stop loss. Let's I think, did I take this? I think I might have taken this trade. Or this was the one, yeah, I think this was the one where I thought I analyzed the short and posted it, only to realize that in my sleep I took a long. What time of the day was this? Yeah, 1:46. No, this wasn't that one. This is another one. I think I did I take this one? Anyway, so you're entitled, like I said, to see that as a valid trade, right? All the way back to the volume area low of the previous day. So let's see. Win, lose, maybe lose. Fine, cool. You walk away, 1%. Now, and this is what that loss tells you. Okay. You see that? Now we're in. I don't even go back to a 4-hour chart. Now I'm in an area where I do expect at least a scalp. Okay, so do we form a 15-minute reversal? Okay, we did. Again. Conservative, aggressive. Let's see. Back down to the same level. Okay, so let's see. And again, you lose. Fine. So you lost 2% now. But you've come back to this and you see this. Now, do you go for it? Actually, no, because we haven't engulfed there. So we don't go for it yet. We haven't engulfed there. Not quite. This candle is not higher than this one, and it's not taking out the low. So there's no engulfing yet. There's no engulfing yet. Having said that, sorry, let's go back down. Go back. So there's no engulfing there. There's one here. But for me, this trade's gone. I'm not getting in this because I've got to put my stop loss all the way back there. What happens? Does price come back? It does come back to give a retest. And now we get that. So here, stop loss, there. Now, you could have just said, hey, I'll take this here because all I was waiting for was a retracement. That's fine. You take it there. So I saw the engulfing. I'm waiting for a better entry. Or I want to see the retest complete. Either's fine. Usually I'm a retest complete kind of guy. Right, back down to the nearest low. Let's try for at least 2 to 1. So that's roughly this one there. Okay, what do we see? Trade wins. Not only does it win, it actually comes all the way back down to our original target. Remember, when we took these 2 losses, our target was here. If you held for that original target, you would have made 3.5 to 1. You'd have lost 2% and come out with 1.5% in profit. It's not bad. And I think, where are we now? Is that where we are in price at the moment? Yeah. So this is where we are as of now. So this trade formed over the last few hours. And I think, did I pop it in the group that I was staring at this? No, this was the one I was staring at, the upward move. Anyway, that's how I and anybody who would consider themselves a professional go through the markets as the week forms. Now, I'm using my framework. Whatever framework you use, volume area, even if you use things like RSI, I hate them. But even if you use things like stochastics and RSIs and trendline breaks, the framework is irrelevant. What's relevant is the systematic process you go through, right? I have levels I'm looking to be hit on a higher time frame. There's a framework I'm looking to see happen. The framework is interchangeable. I'm then going down to a lower time frame using market principles to spot an entry, to tighten my risk, and then go to a higher time frame target. Rinse and repeat. That's it. Any questions, or I'm going to call it a session. Thanks for hanging with me, those of you who have. It's been live. Pun intended, live. If I don't have any questions in the next 10 to 15 seconds, we will call it quits there. God bless you. Have an amazing weekend. At this point, I would not be entering any other trades. I'm not saying we wouldn't have any other trades, but basically by 4 p.m. for the week. All right, guys. Take care. See you. Bless you. Plural Academy students, see you tomorrow at 7 p.m. If you want to learn how to get on the inside of this amazing collective and be taught systematically how to become a market breaker, you can send us an inquiry at this or come into this Telegram channel and ask a question about how you can get in on the course. Because of time, I'm not going to show you the website and how to sign up. You know what? I will show you the website. Let's just do that real quick so you can sign up for yourself. If you type into any search engine, Plural Markets, the hedge fund, like you see, we are pretty much #1 on the SEO. And Google Gemini actually will tell you a little bit about who we are. That's interesting. I haven't seen this AI entry about us. But anyway, that's our website over there. Tells you about the course, the tiers, the prices, how you can sign up. If you go further down a little bit, it goes into a little bit more detail. Tells you what we offer and all that kind of beautiful stuff. Who we are, myself, an SD, and how you can apply. Now, we are currently opening applications. By the time we finish session 8, we will close all applications for this cohort, and moving forwards, you'll be able to get in. I think it is first week in October, if I'm not mistaken. No, first week in November, sorry, is the next cohort. So, now, if you want to enroll, basically you pick an enrollment plan. You can pay in full, you can pay in installments by Klarna. I'm going to give you, so that's the payment page just loading. I'm going to give you a bit of a insight into what it looks like once you're in. So I have my login as a founder. This is basically previewing your access as a student. This is your dashboard. Basically, these are your sessions. Second. Okay, so see your sessions. Basically, you get a pre-recorded session. And 1 second, what's wrong with this? Okay, something's wrong with the platform. Anyway, you get a pre-recorded session and a live session simultaneously. So we teach you systematically, theoretically, with a pre-recorded video, and then we come back to have a live video where we reteach that course content, section of the course content, with you in the class using live chart examples, giving you a chance to ask questions. And then we also have live chart analysis sessions where we freestyle and go through the charts and retroactively apply several sessions together and give you a chance to ask questions. You get your slides, you get your student workbook, and all that good and wonderful stuff. Okay, so yeah, so this is the live analysis session. That's a live class recording. For some reason, my browser is not letting me watch it, but I can guarantee you that the videos are there. All right, it's been live. Pun intended again. Take care, guys. Take care. Bye-bye.